Welcome to TradeTheMBI.com. This is John. This report is for the 9th of December. It feels like December's flying by here. So we knew that we had this little mini collapse with our extreme dip of the steel below this negative 22 level, and we were expecting a brief dip that would most likely come back up to the highs based on previous experience, but ultimately lead to a bit more significant decline later on once things actually rolled over in a way that they weren't able to sustain anything. But at this particular point, we are back right up to the same level that we were at before off of that mini break. And we had the key points here, the 76% range, and then we had obviously the 3116 algo, which corresponded to 50K as well as 5K charts that had, well, within a point or so, the same algo. Of course, the ABM yellow 31, 34, 50 range here, all maintaining a plateau here going across. So the market's been doing pretty much even to what we expect. No surprise here, especially coming into a year end, right as new fund money was coming in. Of course, that's getting exhausted at this particular point. So whether there's a new catalyst or something that will drive it further remains to be seen yet. But at this particular point, all the warnings of, dire economic blah, blah, blah have just fallen flat. And without any of those going in the same direction, the pushback up was going to be obvious, given that so many people were behind the curve on returns for the year, and that they would have to suck it up. And most funds can only go long. They really either long or out of the market and just in cash, and so it doesn't give you much of a choice at this particular point, particularly with no growth in Europe. The Europeans are forced to come into the market as well because it's the only place where you can get yield, and there you go, we're right up here at the highs. So all in all, just fine. The question now is going to be, even with the NASDAQ here, the steel is slightly above, but a dip back below, and maintaining of, green shy of the red. Of course, in this case, you have both of them rising, and we broke into a new zone, which is what lifted that Friday action to, new peaks. It's maintaining itself, and that's not a surprise, because this is always that you buy the first dip there, and then you see if there's enough to push forward, and if you can't break out into that new high, then it becomes more problematic, because people start to say, hey, I don't know that there's enough to sustain it. And of course, that push up, the pressure coming down in the euro. Likewise, though, the euro's got the British elections, and that's going to be critical there. Success there, Brit exit winning, meaning staying in the EU pretty much, even though all pretend. That should push the euro back up to its peak levels again. Should any of that apple cart be upset, then obviously the euro will experience more difficulties, which will put downward pressure on the S&P. And of course, oil, we would see a major decline in oil if there was real decline in economic activity, particularly in the U.S., which is now a net exporter of oil, which is the first time we've seen that starting to take place. And that's putting downward pressure on gold, which we expected to come back and revisit the lows, even despite the short-lived pop. And you can see that rejection taking place right here with the cyan. So all these little factors fit into what we saw on Friday, which was, look at that cyan just so far below red that it was just a non-stop. And we just went right through each of the various spots. We supported right on the 3117, which caused us to move right up to the next one, the 3132. The next one above that was the 44, and that's now become the new floor. And guess what? We're bouncing right off that level at this particular point. So all pretty consistent, all pretty easy, and it's just a matter of staying with what is. This soft little weakness here, the question now is just a matter of red breaking above that negative 7.5. If it doesn't, if we break below the 3144, then obviously the 3132 is the next range below. Pretty simple stuff. Anything above here, we start to get back to the 100% on the daily, and breakthrough would be the critical aspect, because a failure to break through could create maybe some more sideways action going across. It's going to take some kind of negative catalyst for that to break down. Maybe that's an impeachment vote or something else. It'll always be a news event that they'll attribute to what happens, but we'll start to see it before it actually takes place. So there's no real concern for us in that aspect of it. And we'll just keep taking what is and going with it. There was nothing really to report on Friday from this action. It just was all quiet, straight up, nice and soft, and those tiny little bars reflected. Still a decent amount of volume in it. It just all one directional. And it was pretty clean with where the cyan being under red was most of the time, and with the steel completely reset. You can see we've got into a little more garbled period right here in this last stretch of the pre-market. So we'll play that one out as it goes. As always, though, I will certainly update anything that is new and relevant and put it on our Skype chat. Trade well, and we'll talk again later.